welcome to the Metals 100 coverage for the PDAC 2025 here in Toronto. I'm very glad to have Tavi Costa here with me here today. How are you doing?
Good. Thanks for having me. Looking forward to this.
Sure. So we have a few topics to talk about. Maybe first, give us a bit of background about yourself and your firm.
Sure. We run a global macro, long short, and also a precious metals fund, so we're very involved in mining. Therefore, why we're at PDAC, but been very involved with the commodity space for a long time, and believe that not only that, but emerging markets are both things that I think are going to be the biggest focus for us to deploy capital in the following years.
And you had a talk yesterday about the bear case of US dollars here in PDAC. I would say from the title, you're pretty bearish on US dollars. What's your thoughts on the US dollar? Because US dollars been pretty strong, especially recently too.
Yeah, and that's exactly why I like the view of being more negative on the dollar. I think the dollar has performed exceptionally well over the last few years. It's probably one of the most overvalued levels we've seen in history. The last times we saw the dollar at these levels on a real trade-weighted adjustment from the Federal Reserve was really at the Plaza Accord in 1985. Which caused a coordinated act across central banks to devalue the dollar. And the second time we saw this was 1933. After the Great Depression, you saw a bunch of countries at that time, 1931, devalue their currencies, and then the dollar surged, and then the dollar had to actually be devalued by the US government. So I think we're in a similar position now. I don't know if it's an organic or a Mar-a-Lago Accord or some sort of coordinated act, but I do think that the dollar ultimately goes lower, not higher. And that is because the administration has to focus almost entirely on reducing rates overall. And as they do that, I think the dollar will suffer.
So are you a believer on gold and gold equities this year? Because since we know gold have a negative correlation usually with US dollars. So are you a gold buyers and gold equities buyers this year? And what's the thoughts on investors? Is it a good timing to get into gold this year?
I think gold has been mostly driven by central banks buying, in particular international central banks. We've had about 50-year highs on central banks in terms of ownership of gold recently. The next leg up, in my opinion, will be pushed by the dollar, by the weakness of the dollar versus other fiat currencies. The last time we saw something similar was in the early 2000s. And I think we're going to see it be in a very similar environment. And so therefore why I believe there's green light for many assets that tend to be what we call high beta versions of gold. In other words, derivatives of the gold price that tend to perform really well. And so there are plenty of those. And I would say that natural resources are certainly in that bucket.
So how about oil? Are you bullish on oil as well this year?
Oil has a lot of asymmetry. People were very bearish or are currently very bearish on oil. Oil hit about $130 a barrel during the Russian-Ukraine invasion. And then since then, we've seen positioning going from very extreme and crowded to completely uncrowded. And so in my opinion, it's one of those asymmetric bets that you can get in your portfolio in case there's some sort of geopolitical issues or inflationary shocks. And so I'm a big believer that when you have inflationary eras, long-term, oil prices historically tend to do very well. So being able to purchase oil at these levels, in my view, is a real bargain and also an opportunity. So it's very compelling. So I like energy companies, but I also oil as well alone.
Good to know. And what's the thoughts on the inflation? You mentioned it a bit because we've been in the high inflation rate in the past few years. Are we out of the woods for the high inflation? Because that's sort of a key part of the monetary policy, how they cut rates as well.
So I'm a long-term believer that we're in about, new cycle of inflationary era of inflation running hotter than historical standards. Now, aside from that view, I also think that inflation in the near term is about to be more challenged, meaning we're about to see some sort of real weakness of growth that may cause inflation to decelerate. So I'm more concerned about the economy itself and how policies may actually have an impact on the markets in a correction or some sort of issues that may emerge in the US that may cause rates to fall significantly but inflation will be impacted by that in a negative way. In other words, it would actually be decelerating inflation, which would be good for consumers. But ultimately, the long-term view is that inflation will come back again. So, it's a tactical view that I'm offering here, but long-term, I think inflation will continue to run hotter than expected for the next 5 to 10 years.
So the final question I want to ask you is about tariff, because this seems to be getting a lot of attention because of the Trump 2.0 administration. So do you think tariffs will play a really significant role in terms of affecting the market in the next few years?
I suspect that Trump is really trying to get back to those 1800 levels of revenues coming from tariffs. And so if he's chasing that, and if you listen closely to Scott Bessent, his Treasury Secretary, I think he mentioned a few times that Trump's favorite word is tariffs. Trump's second favorite words is reciprocal. So I would think that there's going to be some real reciprocal trade agreements in the next few years that could potentially also be another source of revenue for the U.S. The U.S. is in a very difficult position when it comes to government imbalances. It needs to balance its budget. It probably won't balance its budget, but it needs to attempt at least. Otherwise, we'll have issues with sort of like what we tend to see in emerging markets, which is total loss of faith over the treasury market or the dollar, which I don't think it's optimal. So they're going to do anything they can to avoid that. And I think one of those things would be creating other sources of revenue. So tariffs are very likely to be here to stay and probably going to be much larger than we've seen in the last few decades.
So a lot of investors to chew on and look forward to, but in a negative way probably. But thank you for your time here with us, Tavi. I look forward to speaking to you next time again. Thank you for your time.
Thank you.